If you're a Canadian taxpayer, your paycheck in 2026 is going to look different. Some of you will see more money hitting your bank account, others might be paying a bit more in payroll taxes. And there is one change that could affect 5.5 million Canadians without them even lifting a finger. Let's break down exactly what's changing and how it impacts your wallet. Welcome back to KP Money Talks, and today we're covering the major Canadian tax changes for 2026. What's new, what's gone, and what you need to do about it. Whether you're seeing tax relief or higher deductions, understanding these changes will now help you plan better and avoid surprises come tax season. Hit the subscribe button if you want practical finance content every week. Let's dive in. The biggest change for 2026 is that the lowest federal income tax rate drops from 15% to 14%. And this is the first full year this lower rate applies. This was introduced mid-year in July 2025. So if you remember your tax dropping slightly back then, 2026 is when you get the full benefit for the entire year. If you earn up to $58,523, your income in that first bracket is now taxed at 14% instead of 15%. But here's what people miss. Even if you earn more than $58,523, you still benefit because the first portion of your income gets taxed at the lower rate. Tax brackets stack, they don't replace each other. Here's how the 2026 federal brackets look like. Income up to $58,523 is taxed at 14%. From $58,523 to $117,045, it is taxed at 20.5%. $117,045 to $181,440 is taxed at 26%. $181,440 to $258,482 is taxed at 29%, and above that is taxed at 33%. These thresholds increase from 2025 based on a 2% inflation adjustment, which helps prevent bracket creep, where inflation pushes you into a higher tax bracket even though your purchasing power hasn't changed. For most Canadians, this tax cut translates to a few $100s per year in federal tax savings. Not life-changing, but definitely money you'd rather keep in your pocket. The basic personal account, the income you earn tax-free, is rising from $16,129 in 2025 to up to $16,452 in 2026. If you earn $16,452 or less in 2026, you'll owe zero federal income tax. That's the threshold where federal taxes kick in. For those earning above this threshold, the tax break is worth up to $2,303. That's 14% of $16,452. This is a non-refundable credit that everyone can claim. It's automatically factored into your tax calculations. You don't need to do anything special. It just reduces the amount of income you're taxed on. This increase reflects inflation adjustments to ensure the value of its exemptions keep pace with rising costs. If you're saving for retirement, these are updates to contribution limits you need to know. The RRSP contribution limit for 2026 is $33,810, up from $32,490 in 2025. Remember, you can contribute up to 18% of your previous year's earned income up to this dollar ceiling. So if you earned less than $187,833 last year, your personal limit will be 18% of that income. You have until March 2nd, 2027 to make your 2026 RRSP contributions. But the sooner you contribute, the sooner your money starts growing tax deferred. The TFSA limit for 2026 remains at $7,000, unchanged from 2024 and 2025. The limit only adjusts in $500 increments based on inflation, but we haven't hit that threshold for it to jump to $7,500 yet. If you have never contributed to a TFSA and were born in 1991 or earlier, your cumulative contribution room as of January 1, 2026 is $109,000. That is a lot of tax-free investment growth potential if you have the cash to max it out. Here's where some Canadians will feel a pinch. Payroll taxes are going up. The maximum CPP Canada Pension Plan contributions for 2026 is $4,230.45, up from $4,034.10 in 2025. The contribution rate stays at 5.95% for employees and employers. But because the maximum pensionable earnings ceiling increased, you'll pay more if you earn above the threshold. If you're self-employed, you pay both the employee and employer portions, so you're looking at nearly double that amount. The maximum insurable earnings for employment insurance rise to $68,900 in 2026, which increases the maximum annual employee premium. For workers earning $85,000 or more, federal payroll taxes will cost $5,770 in 2026, while employers will pay $6,219. Combined, these payroll tax increases could cost workers an extra couple $100 per year. It's not massive, but it's noticeable on your paychecks. Starting with 2026 tax year, the CRA will automatically file taxes for approximately 5.5 million low-income Canadians to ensure they receive benefits like the Canadian Child Benefit and GST HST credit. This targets people who don't file because it's complicated or they don't think they need to, but they're missing on thousands in benefits as a result. The CRA will prepare the return for you based on information they already have. The federal government eliminated the consumer carbon tax, which means lower costs at the pump. But it also means you will no longer receive quarterly carbon rebate checks. It's a trade-off. You save money when buying gas, but you lose that predictable rebate payment every quarter. A new temporary tax credit for personal support workers is available for the 2026 to 2030 tax years for those employed by eligible healthcare establishments. This doesn't apply in BC, Newfoundland, and Labrador, or the Northwest Territories because those provinces have separate wage agreements. Federal alcohol taxes are expected to increase by 2% on April 1st, 2026, costing taxpayers about $41 million. This is part of the automatic alcohol escalator tax that increases every year without a parliamentary vote. Canadians who file with paper will no longer automatically receive tax packages in the mail. You'll need to call the CRA or order online. The government is pushing everybody towards electronic filing for efficiency. Alright, let's wrap this up. Here's what you need to know for 2026. The good news. Lower federal income tax rate of 14% for the first bracket, higher basic personal amount of $16,452, and higher RRSP limits. Some mixed news. TFSA stays at $7,000. Carbon tax is gone, but so are the rebates. And automatic filing helps low-income Canadians. And lastly, not so great news. Higher CPP and EI contributions mean slightly smaller paychecks. You should check your paycheck in January to see all these tax changes reflected. If this helped you understand the 2026 tax changes, hit that like button and subscribe for more personal finance content. Also, drop a comment below. Thank you for watching, and I'll see you in the next one.